Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Steve Sadove, Mastercard Senior Advisor. He joins me on Black Friday to discuss Mastercard SpendingPulse insights for Black Friday retail sales and larger retail trends for the holiday season. Steve, it's great to see you. Welcome to Trade Talks.
Happy to be here, Jill.
All right, you got it. And it feels as if this holiday season is certainly more busy, particularly in store. What are your expectations in terms of what sales will look like?
Well, if we look at the whole holiday season, the Mastercard SpendingPulse forecast, which is a measure of all forms of tender, it's not just the Mastercard numbers, is calling for a 7% growth for the holiday season. So that's a healthy number, but remember, that includes inflation. So it's overall, we're keeping pace with inflation. It's a slowing number from what we saw earlier in the summer. We were looking at 11 to 12% growth over the course of the summer, and the month of October was 9.5%. So it's healthy, but it is clearly slowing. It's also a period of time where people are getting back into the stores. The expectation for the holidays is that stores will be growing substantially faster. That'll be growing at 8% versus e-commerce at 4%. And again, this is back to what we saw in a pre-pandemic type of an environment. Black Friday, which we're looking at right now, is extremely busy, and that's looking to grow roughly 15% versus year ago. Again, recognizing that we were in a non-holiday, non-promotional period a year ago, and right now we're into much heavier promotions than we were last year because of all the supply chain issues.
Right. And it also feels as if the holiday season gets extended more so every year. I mean, they're starting these deals in October at this point.
Absolutely. You saw it start a couple of years ago when Amazon broke early in let's call it October 11, 12. This year, they went to 2 Amazon Prime days. Walmart, Target, and others broke early around the similar type of a timing. A lot of that driven because of the excess inventories that were in the system. So you had so many issues with apparel and toys and some of the other categories that you did see an earlier promotional environment. And it has been starting earlier and earlier. Having said that, Black Friday, Cyber Monday, this is still the sort of among the heaviest shopping days of the year and a very important emotional kickoff period for the holiday season.
What categories do you expect to do well this year?
Well, I would call this to be the experiential, the back getting out categories, restaurants, department stores. People want to go into a mall. The categories, certain types of apparel, like going out if they want to go to a wedding or party, those types of categories doing very well. Beauty will do well in this type of an environment. What won't do as well is some of the categories that were the winners during the earlier stages of the pandemic, the athleisure, the exercise bicycles, some of the electronics over the period because you bought your television set. So some of those won't fare as well in the nearer term. I would look at this, though, as a period where we're reverting back to the norm. And what I mean by that is if I look at retail SpendingPulse data over the pre-pandemic, current today versus the pre-pandemic, overall retail's grown a little bit more than 20%. Let's call it 21%, 22%. That's what you're seeing overall. A lot of these categories that got hurt are now coming back strongly. Things like travel, lodging, some of the luxury categories, the getting into a mall. Those are all winning right now because they were losing early in the pandemic. Some of the early winners are obviously not doing as well. One of the big winners is internet. Internet was 11% of commerce going into the pandemic, growing at about a point a year. It's now 19% of commerce. Some people thought it would continue to go immediately to 25%, but it didn't. It continued to grow, but it's an increasingly important part of the total puzzle. So even though you're seeing stores growing this year faster than the internet because people want to get back into a store, don't underestimate the importance of the internet at 19% in terms of the overall shopping. In certain categories like apparel, it could be as much as 40 to 50% of shopping.
Yeah, I mean, anecdotally, it feels as if the stores are busier this year than I can recall. I mean, I'm including 2019, even before the pandemic, but it feels as if that omni-channel presence really is key because you want that fluidity between e-commerce and in-store. And another thing I've noticed, Steve, is that stores are really focusing on bringing experiences to consumers. I don't recall it being as much fun, going to stores as it is now. They're really focused on experience.
Well, I think it's a critical point, and that people are getting back into the stores. They want to go out. They want to go to the mall. This is the time when the stores have an opportunity to prove what they can deliver in terms of experience. The old advertising adage, you can get people to try something once, but if it's no good, then they're not going to come back. And so this is the time when stores have that opportunity to deliver on an experience that's more than just price, that gives them the choice, the selection, gives them the opportunity to experience the products. And that's very important. The internet, it is an omni-channel, though. Some consumers want to buy online, pick up in store. They want to be able to get the convenience of having it shipped to their house. Others want to be able to browse and explore. And you've got to be able to meet the demands of that omni-channel consumer. The winners are the ones who are doing it well. A lot of the big box players have done it very well during the course of the pandemic. That's why they've been accelerating their growth relative to some of their competitors.
Well, that's another thing I noticed too. There was more employees doing buy online and pick up in store than there were actual shoppers in store. That's another trend that I noticed. But how do you balance consumer experience, whether in store, then you're also interacting on social media and they're emailing you promotions and they're texting you promotions and so forth? How do retailers balance their touch points?
Well, I think that the core to this is, how do they get into a world of personalization and analytics? Because you want to get an email that's personalized to Jill. You want to hear about things that you're interested in. Now, marketers have those capabilities to understand what your behavior is, what you need to be, what you should be seeing, and then to have the analytics and the tools to be able to develop the right kinds of loyalty programs. Mastercard does a great job of doing that kind of thing, but you need to be able to do that in this environment that is much more complex for the consumer. Does that individual consumer want to be getting online messages versus store? How do you drive the behavior one versus another? And you're in this environment, in this post or endemic period, where it's not one or the other. Last 3 years, we were in an internet only period for a while. Now we're in this explosion getting back into the store, in a reversion to the norm. Going forward, it's going to be about both, and you have to satisfy that consumer, and the expectations of the consumer are extremely high.
Yeah, well, and not that I want to rush the holiday season, but I'm really excited to see what the data shows in January, when we can kind of reflect back and see how these strategies have worked. Steve, we appreciate your insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.